to make to your bank. Here's the other thing. Why on earth would you ever invest in real estate to get maybe a 3, 4%, 5% return, especially with how expensive houses are today? The interest rate, the environment that makes it difficult for you to actually make a return because it's hard to evict people when you can invest in the stock market. This is
Come on, Muriel. Bro, I love you, but come on. I've run many scenarios for the longest time, and I've challenged my financial planner. The thing with real estate is you don't have to put all of the money that you're going to invest in a property. So you're putting 20% down, let's call it, as an investment property. Let's say if you're buying $1 million property, you're putting $200,000 down, right? Now that $200,000, you're not just earning on the $200,000, right? Or if you took that $200,000 in the stock market, sure, you might get 10% or 15% return per annum, and it is a little bit more volatile, and you have no control over that avenue, right? No control over that asset. At least with the housing market, you can control it, paint it, fix it, clean it up, etc. But you're earning 6 or 7%, maybe even 4% on your purchase price of $1 million, not on the $200,000 you put as a down payment. So be careful. You can't look at these numbers in isolation.
This is a perfect example of the S&P 500. Look at the annualized returns basically for the last 10 years. 9%, 20%. Sure, it went down 6, 28, 16, 27, went down 28. We know that was bound to happen. 24, then 25, it recouped. This is a much better return, significantly, especially when it's compounded. As you guys know, I make zero.
So based on that, there are good returns, but again, you can't look at it siloed. What I did is when I ran my reports, this is from years and years back, I looked at the 30-year return you get on the average home here in Toronto, and I also looked at the average return based on the TSX, right? And compare those, because again, you could be, here's the problem too, when you're purchasing stocks, if you don't know what you're doing, you're not going to get those 26% returns. You're probably going to get at best the average, sometimes lose your shirt. So be careful of that. And if you lose your shirt, you have nothing to hold on to at the end of it. At least purchasing, I think with real estate, you have a physical asset.